Property, plant, and equipment, or PPE, the accounting PPE. What do you know about it already? Well, we know that property, plant, and equipment is a non-current asset or a long-lived asset, and it is increased by debits and decreased by credits. And the only things that you would find in it are the beginning balance, which is all the property, plant, and equipment you have previously purchased. It would be increased if you bought property, plant, and equipment that year, and it be increased by the cost of the property, plant, and equipment. It could be reduced by the cost of the property, plant, and equipment that you disposed of to get the ending balance. There's an account that goes with every single property, plant, and equipment account, and that is accumulated depreciation. And it is a contra asset account, meaning it's increased by credits and decreased by debits. So you would find a beginning balance on the credit side, which represents all the depreciation previously taken on that property, plant, and equipment. It would be increased by the adjusting journal entry, fondly known as DED, or debit depreciation expense, credit accumulated depreciation. It would be reduced or debited by any disposals of property, plant, and equipment that year, and the disposal amount is the accumulated depreciation on the asset that you disposed of through the date of disposal to come up with the ending balance. We also know a few entries. We know that the entry to buy property, plant, and equipment is to debit property, plant, and equipment, or building, equipment, land, whatever it is, and to credit cash or the liability for the amount of the cost. We know that every year we'll make an adjusting journal entry at the end of the period to recognize the usage of that property, plant, and equipment, and that's the debt entry, debit depreciation expense, credit accumulated depreciation. The amount of that entry is where we're going to spend some time. Also, it is the focus of your homework. The other piece that we know about is when we sell property, plant, and equipment, we'll debit cash for the sales price or the cash proceeds from the sale. We'll debit accumulated depreciation for the amount of depreciation taken on that asset through the date of disposal. We'll and then we'll credit property, plant, and equipment for its cost. The entry or the amount that makes this entry balance is we'll either debit a loss or we'll credit a gain for the amount of the difference in the amounts that we've already recognized. So that's what we know. We also know that the book value or the carrying value is the property, plant, and equipment cost minus its accumulated depreciation. So book value or carrying value. Well, let's take a look at CSI accounting and figure out how to reconstruct the entry that recorded the sale. So this is the T account analysis that you appreciate doing all the time. Now, we know that we can reconstruct the equipment entry, and we can do that because for 2016 we're given the ending balance, and for 2017 we're given its ending balance. So we can reconstruct what happened during 2017. So, well, what could have happened? We either acquired property, plant, and equipment, or we disposed of property, plant, and equipment. And we'll figure out those two amounts in a second. Also, going along with that analysis, we need to figure out what happened in the accumulated depreciation account that year, from the beginning balance in 2017, which is the ending balance in 2016 of $9,800, to the ending balance for the year of $10,500. We know that it's going to be increased by the depreciation expense, which we're given for 2017. Remember, 2016 we're going to ignore because that has nothing to do with this year's depreciation. And we can see that a beginning balance of 9,800 plus 3,800 does not equal the ending balance of 10,500. So we must have disposed of something. So that's the first thing we find here, number one, that the depreciation on the asset we disposed of was 3,100. So thus we're going to put it in the entry to recognize the disposal. The other pieces that were given is there was a loss on the sale of the equipment of 900. And we also see that the cash received, or the sales price of that piece of equipment, was 4,300. So we know what the three debits are for cash, accumulated depreciation, and loss. So we can deduct that the credit to equipment, or the cost of the equipment we disposed of, was 8,300. And so that's where number 2 came from. And then we can put that into the equipment account on the credit side, because that's what made the equipment account decrease. So with that information, we can back into how much did you spend on new equipment this year? Well, in order to get that equipment account to reconcile its beginning and ending balance, I can see that I acquired $11,800 of equipment that year. So hopefully this makes sense, but if it doesn't, there's another problem. So it's your turn. Here we have a problem. We're given the beginning and ending balances of equipment, the accumulated depreciation. We're told that we had a gain on the sale and the amount of the depreciation expense for the year. So we need to reconstruct the sales entry, and we'll also need to reconstruct the equipment and the accumulated depreciation accounts as well. So let's see what happens. So reconstructing the entries, looking at equipment, I have a beginning balance of 32,700, an ending balance of 37,500. We know that we purchased, this is disclosed in the problem, I just failed to write it down. We purchased 12,000, so we can figure out that the amount of equipment we disposed of was 7,200. So that's where the disposal amount in our entry to reconstruct the entry on the sale is a credit for 7,200. Reconstructing accumulated depreciation, started the year at 14,300, ended the year at 17,600. We can see that our debt entry for the year was 7,200. So if that's the case, then the amount of accumulated depreciation on the equipment that we disposed was 3,900. So that's number 1, and that goes into the entry. And because of that, we can deduce how much cash, or the sales price of that equipment was, which is $5,400. So that's 2 different ways and different questions that we can glean the information from reconstructing the equipment account, the accumulated depreciation account, and reconstructing the entry to sell that equipment.